Hello my fellow investors and welcome back to another viewer requested fundamental analysis video. Guys, let's spin the wheel to see what company we should analyze today based off of yours recommendations. Oh, that was a really close one. All right, we got the company now, CZR, which was brought up by none other than Red Firefly. And yeah, you recommended a lot of them. Again, I don't know if you're still watching, but if you are, well, you know what? Congratulations, we got the company over here. So let's take a look at this company, guys, and see whether or not it's a good buy, right? Let's take a look at their fundamentals and see if they had any earnings. We'll also go over that as well. So with that said, let's get started with this analysis. So I am already excited for this company because I wasn't expecting this to be Caesars Entertainment. What? Okay, so this is already looking awesome. This is the company that owns, well, none other than, you're seeing it right here on the screen, Caesar's Palace. So that's interesting, right? Casinos in what, Nevada? That's kind of cool. Now I would actually like to say something akin to this, and that is that, well, even though you may not necessarily want to invest in this company, there is another way to, I guess, kind of invest in this company through the real estate company Vici, because one of their properties that they own, it is Caesar's Palace. So pretty much, if you own Vici, you are kind of like pseudo owning Caesar's Palace because of the fact that their tenant is Caesar's Entertainment. So that's kind of cool. You know, all the rents that Vici gets from Caesar's Entertainment, you get in the form of a dividend. So it's like pseudo investing into them. Nonetheless, though, this is already looking really, really interesting. Now, this company, I don't think needs much of an introduction. It's one of the most famous, I guess, casinos out there and hotels out there. Nonetheless, though, let's take a look at Caesars Entertainment for all of those of you who may be, foreign out there. So we got over here, Caesars Entertainment Inc. operates as a gaming and hospitality company in the United States. The company owns, leases, and manages domestic properties in 16 states with slot machines, video lottery terminals, and e-tables, and hotel rooms, as well as table games, including poker. It also operates and conducts sports wagering across 28 jurisdictions in North America, including mobile for sports betting and regulated online real money gaming in 6 jurisdictions in North America. So yeah, guys, they mainly have to do with like sports, not sports. They mainly have to do with like gambling, right? Casinos, gaming, stuff that you could bet money in order to, get more money back. And on top of that, they also have, like, as we just read, hotels and that kind of stuff as well. So now let's come into the earnings summary. They did have earnings on August 1st. We got over here the EPS normalized actual coming at 12 cents. That was a miss by 17 cents. Now the GAAP actual was $4.26. That's huge. That was a beat by $3.88. And the revenue came in at $2.88 billion. That was beat by $10.7 million. So let's take a quick peek at their earnings report. And of course, this will be linked in the description below. So we got over here, second quarter 2023 recent highlights. We got GAAP net revenues of $2.9 billion versus $2.8 billion for the comparable prior year period. So that is a slight increase. We got GAAP net income of $920 million compared to the net loss of $123 million comparable to the prior year. So yeah, guys, the net income is atrocious. We're going to take a look at this when it comes to the calculator, but the fact that they just went from a negative 123 million to a positive 920, that's really, really good to see. Same store adjusted EBITDA of $1 billion versus 978 million comparable to the prior year period. So this is increasing, and we can see here the 2 points. Same store adjusted EBITDA including our Caesars digital segment of 996 million versus the 1 billion. So that was a slight decrease versus the 1 billion for the comparable prior year period. And Caesars digital same store adjusted EBITDA of 11 million versus negative 69 million for the wow, okay, that's actually kind of insane. All right, let's take a look at what the CEO had to say. The second quarter of 2023 reflected continued strength in our business. Demand remains strong in both Las Vegas and regional markets. Caesars Digital posted its first quarter positive adjusted EBITDA since the rebranding to Caesars Sportsbook in the third quarter of 2021. Our capital investments are generating stronger than expected returns based on recent new property openings. All right. So that's pretty much it. They really don't have anything. Well, they don't have a dividend, and they don't have anything mentioning the forward-looking statements or guidance. So again, Please read the rest for yourselves. The link is in the description below if you would like to buy into this company, which I highly encourage everybody to do. So let's jump into now the spreadsheet. We got the ticker for CZR. That's actually a little bit difficult to say. Market cap of almost $12 billion, 11.83 to be exact. PE of 17.3. That's already looking interesting. Current share price of $54.95. And if we take a look at this graph on the 1 year, this thing is up almost 20%. Year to date, wow, it's up 30%. 52-week range is 31.31 to 60.27. So we're near 52-week highs. Not really, well, yeah, we're kind of near 52-week highs. Doesn't really tell us much though, right? Just because a company is at 52-week low or 52-week high doesn't necessarily mean that we don't buy it. It's just that we just have to do a little bit more research when it's on either end of the scale. Now, as I said, guys, they don't pay out a dividend, which means all of this free cash flow is going straight into themselves. And if we take a look at here, the 5-year average free cash, we got 49.40. And the last year's free cash was 23 million. Now, okay, that is already a little bit concerning because it's showing that the average is higher than the last year's, meaning that the last year's is lower, which is, again, not really good. But nonetheless, though, let's take a look at the 5-year scales when it comes to all of these graphs. So let's jump now into the net income. Guys, okay, just fair warning. All of these profit metrics, well, I wouldn't say all of them, but the net income, the free cash flow are going to look really bad. But I do have an explanation for it, and I'm pretty certain everybody could tell what that is just based on this first one, right? We got the net income 5 years ago of $95 million to 1 year ago of negative $899 million. That is a whopping decrease of 1,046%. Now, here's the thing, right? Obviously, the big elephant in the room here is this 3-year ago value going to negative $1.76 billion. Okay, guys, here's the answer. If anybody couldn't have guessed it already, COVID. Obviously, casinos mainly were the ones impacted when it came, well, I wouldn't say mainly, but like casinos were on the front lines, hotels were on the front lines to this impact. Nobody could go outside. Hotels were like, nope, cancel everything, you know, we can't have any more people. So that explains it. Now, I do see some positive things here where 3, 2, and 1 year ago, it's increasing back to 0. What's a little bit concerning is the decrease, slight decrease from 5 to 4 years ago, but all in all, this is... Okay, it wasn't their fault. I just wish that this was going back to in the positive. But I'm going to have to give this, guys, I would say like a 50%, maybe even actually a little bit higher. It'd be like a 55% because nothing here was their fault. Not that I know of, right? Not that I know of. And you guys can tell that as soon as the restrictions just started lifting, well, this went back, well, it's going back into the positive. And in fact, if we take a look at the trailing 12 months, well, I mean, we just saw the earnings report. The trailing 12 months here says we're already at the positive. Take a look at that. $688 million in the positive. So yeah, this is why you know what? I'm going to change it again, guys. I'm going to change it again. I'm actually going to give this a 65% because they are recovering. Everything is going in the right direction. It really wasn't their fault. So 65%. Looking now at the free cash flow. Now, this one is interesting because we got 5 years ago of $176 million to 1 year ago of $23 million. That is a decrease of 87% with an average of $49.4 million. Obviously, the decrease here, massive decrease during COVID, understandable. Then they jumped 2 years ago, pretty much like canceling the 3 year ago value, but then they're coming back down to this. So I'm going to have to say a little bit lower. This is a little bit more sporadic, but I'm going to say I was like a 55%. I actually like the net income more than that of the free cash flow. Looking at the revenue, it's actually looking amazing. Like, seriously, this is looking pretty good. We got 5 years ago of $2.1 billion to 1 year ago of $10.8 billion, increase of 426.31%. Consistent increase from 5, 4, and 3 years ago, even during COVID, right? Even during COVID. And then we have a massive spike. Now, the reason why I said actually like this one is in comparison to the other two. So I'm going to have to give this, I would think, actually, let's actually see what the revenue is in the trailing 12 months. And as we can see right here, the revenue in the trailing 12 months is already $11.42 billion. So I'm actually going to give this a 70%. I don't like that massive spike, but by the looks of it, they are able to continue it for 3 consecutive years in a row. So yeah, 70%. assets minus liabilities. This one's not looking too bad either. We can see consistently in the positive, kind of going down here from 3 to 1 year ago, but as of today, they are increasing it back up. The average total assets, it is 29.4 billion. Average liabilities, it is 25.6 billion. Doing the difference, we get 3.8 billion. I'm gonna say like a 75% on this one. When it comes into the cash flow minus the liabilities, okay, here's the thing with this one. We got 5 to 4 years ago, actually increasing, right? Going back down to 0. COVID hit, they went deeply down. 3 and 2 years ago, right, deeply down. But then as of 1 year ago, they're bringing it back up. So even though they're still lower than the average of negative 20.75 billion, again, as of 1 year ago, they're at negative 20.75 billion. I think this was mainly due to the fact that it's COVID related, so I'm not really gonna ding them for that. That's kind of ridiculous. So I'm gonna say like an 80% on this one. When it comes to the shares outstanding, we got 5 years ago of 77.2 million to today of 215 million. That is a massive increase of 178.5%. And from the previous year to the current year is another increase of 0.14. Now, majority of these shares got placed, well, during COVID, right? They were just like, we're not making anything, sell a ton of shares because we need capital. We need capital. So I'm not really going to blame them for that one, but I am going to blame them for the fact that from 3 to today, they have been increasing at not too much, but it's, I would argue it's like less than like 5%. So I'm going to say, guys, I'm not really going to blame them for the whole COVID thing. It's perfectly justifiable, but I'm gonna say like at around like a 65% for this increase, and who knows, if the economy goes under, yeah, they might continue to issue more shares in the future. And lastly, cash and equivalents, they currently hold 1.12 billion with an average of $907.13 million. Overall grade looks interesting. Net income is 65, free cash flow 55, revenue 70, assets minus liabilities 75, cash flow minus liabilities 80, shares outstanding of 65, overall grade of 66. This is a gamble because, well, it's the biggest casino in the world, right? It's the biggest casino in the world. I don't think that they're gonna go under. You get me? So my main issue with this is they're really susceptible to outside forces such as COVID and a possible recession here in the United States. So if that happens, it'll get tough for them, but man, it's close, right? It's really close to 70%. So now let's jump into the discounted free cash flow. Now guys, not inputting anything, we got $3.75, not adjusting for debt. And that adjusting for debt goes into the negatives because, I mean, they have a ton of debt, right? Now, that whole debt thing, I think it's pretty common for casinos to have a ton of debt. So I wouldn't be surprised if they did, just FYI. Now, okay, the reason why this number is just so low is because, guys, their free cash flow just isn't a lot. We just went over it. It's really, really tiny. Even at the peaks, it doesn't even get to $1 billion. That's why. So just keep that in mind. So now let's take a look at the projected share buyback. Now, they've been issuing pretty consistently around 0.14%. If we were to extrapolate this and assume in the next 5 or 4 years this exact same increase, assuming no economic collapse, well, that'll be a little bit like, what, 0.56%. So I'm actually going to say, guys, 0 for the low assumption, then let's say 0.5% for the median assumption, so let's put 0.5, and then 1% for sorry, this is all in the negatives. I am so sorry. So this would be -1, right, that they'll issue, and then that they'll do -0.5%, and then 0 for the highest assumption. Okay, now, for the revenue, if we take a look at Seeking Alpha, we can see a 7.79. I'm actually inclined to believe that, assuming, well, it really all depends what happens with the economy, right? So I'm gonna say for the lowest assumption, guys, let's say 6%, then let's go to 8%, and then let's go to 10%. Doing this, we get the target share price of $4.58 to $5.30. Now, all of those of you are saying, the thing is 55, what are you talking about? Yeah, guys, this is based on a free cash flow perspective, and we just saw the free cash flow isn't doing too hot, right? So yeah, and again, I am giving them, I don't know, I'm kind of giving them the benefit of the doubt. They also had net incomes in the negatives pretty consistently. So yeah, that's the reason why this is occurring. Obviously, this is not financial advice, and if you guys don't like these numbers, then by all means, right? You make your own decision for yourselves. That's why these calculators are available for free, as well as the earning support is linked in the description below for everybody to have. So make your own decision, right? Make your own decision. All we're asking for in return, if you do like this kind of content, is to, of course, like, subscribe, comment. Really does help here with the algorithm on YouTube as well as Rumble. So that's the best way that you guys can help us if you so wish to help us. And when it comes to looking at the options chains for September 15th, we get a decent amount here for the put side on the bids. You can see, you know, $59 for a strike of 54, you know, 33 for a strike of 53. And for the call side, it's actually even more juicy. Again, this company doesn't pay the dividends, so this might be one that you might consider, you know, selling covered calls, assuming that you have 100 shares and you bought this thing a lot lower and you don't mind getting your shares taken away if this were to occur. So yeah, I'm looking at this, I'm like $99 for a strike of 55. If you bought this thing at near 52-week lows, you're making out pretty decently right there. Even for a strike of 56, $58 isn't too bad either. So all in all, Caesars Entertainment, this one's actually an interesting one. Yeah, me personally, I would like to own Caesars Entertainment through Vici, because you know, rents are kind of guaranteed in a way. I mean, they're not guaranteed, but they're more guaranteed than, you know, their profit metrics, right? So they have to pay rent no matter what. That's kind of what I'm getting at. So I'd rather own Caesars Entertainment through Vici rather than just owning Caesars Entertainment. But anyways, guys, that pretty much is for this video. You can follow us on the new tech sites, link is in the description below. So that said, peace out, and we will see you all next time.